Hey everybody, welcome. Thanks for joining us here this morning. Who's ready for another Wealthy Winning Wednesday? Woohoo! Who's ready to get in their car and drive profits? All right, please check in. Let us know where you're joining us from today. We'll go ahead and just type a little welcome message. Welcome. Where are you from? Please just let us know where you're joining us from today. Who's ready to get started? Learning how to drive profitable real estate brokerage and succeed profitably. That's the most important thing, isn't it? Sales are great, production is great, revenue is fabulous, but the bottom line is if we don't have profits, we can't keep the doors open, stay in business, and continue operating. So we're showing you not just how to be profitable, but how to maximize profitability. All right, we are ready here. Let's go ahead and get our slide presentation. There we go. Drive profits to the max, accelerate your real estate brokerage, and push the needle. We are on Module 6 today, which is all about budgets. We're going to find out some great information about budgets today. Okay, go ahead and type in the chat. Let us know where you're from. Thank you, everybody, for joining us this morning. Are you ready? Start your engine and let's get going. Today's session is part of our masterclass series, Drive Profits to the Max. As you probably know, we have a couple of other series as well. One is Scale Up Your Brokerage. It's all about building your empire, and then Be the Boss and Dominate Your Market is all about Blue Ocean strategy. And we're going to learn how to maximize profits by starting strong with our custom dashboard. As you know, your dashboard tells you how fast you're going, when you're going to arrive at your destination based on your miles per hour that you're traveling, and the general overall health of your sports car, your race car. And we have to do the same thing with our business. We have to take time and work on the business and look to see what the financial health of our business is doing. That's what we offer here at MBA Broker Consultants. We have a membership program with consultations. We offer business plans available to help you succeed, workshops, retreats, keynote presentations, all of the tools that you need as a brokerage owner. Don't just play the game, change it. And that's what we're going to help you do here today. Today's module is number 6 of 8. Our topic is budgeting for capital Zoom. We could have called it budgeting and forecasting, but we really want to focus on maximizing profits and that capital cash infusion, which we'll also talk about again in session number 8, which is financing and funding. So we're all about the money today. A little bit about me. I think you guys know me by now, but I'm Regina Brown, MBA degree from Azusa Pacific University. And I got that after earning my BA degree in real estate from Ashford University, Forbes School of Business. And many of the techniques that I'm going to teach you here today are things that I learned recently in the last 5 years that I wish I would have learned when I started my real estate brokerage 30 years ago, right? Because I would have been much more successful had I had these tools. And that is really my mission, is to help you succeed and help all of our brokerage owners succeed by offering tools, resources, and knowledge that might not have otherwise been available to us. This is the tools that I'm going to be teaching you today are from the Association of Accredited Small Business Consultants, and I'm an ASBC consultant. So this is many concepts that are learned in the part of the MBA program. Today's focus will be focusing on budget versus forecasting. That's the first thing we'll talk about. And then we'll go through the budget process and why it's important. Then we'll show different budget categories. And then lastly are the types of budgets. So who's ready to get started? Let's hear a woohoo for the money. Okay, I'm going to put up the file sharing right now, which is Drive Profits Module 6. Please let me know if you can see that. You should be able to download that. In today's workbook, or I should say worksheet, because it's part of the bigger workbook. In today's worksheet, you will see notes for today's session, including a course outline. You'll see a self-analysis at the end, and then the 2 books and resources that we recommend for further follow-up. So please let me know if you're able to download the workbook. It's available now over near the chat bar. Today's topic is budgeting and forecasting for Zoom. What is Zoom? Well, that's that great feeling you get when you step on the accelerator and your car just whoosh goes towards the finish line with no or little effort from you. The car is, set, it's on its path, and it's zooming along, and that's what we're going to show you today. We're going to show you how to take all those goals and objectives and put them into a dollar amount. Wheels steer the direction of the car. Here you can see the picture of the Indy racetrack or some other racetrack, and we know that wheels are important. A car has 4 wheels, the 2 in the front set the direction, the 2 in the back push the car, or if you have front wheel drive like most cars do now, the wheels in the front also push, right? But if you have the wheels turned to the right, that's the direction your car is going to go in. If you have the wheels turned to the left, that's the direction your car is going to go in. And it's the same thing with the business. Whatever way we are, whatever path we're on, whatever way our wheels are turned, that's the direction we're going to go in. It sounds sort of basic, but when we go through this session today, you're going to see a little more about why it's so important to have a wonderful budget prepared, ready in advance, because that sets the direction and the path our business will be going on. All right, who's ready for a quiz? Or should we say a poll? A poll's a little more fun than a quiz, right? A quiz seems like it might be hard work. Okay, so we have a poll here. Our poll is, what is a forecast? Now, I know we've talked about budgets. You've probably heard about forecasts. Would you say a forecast is A, a hopeful plan? Or would you say it's B, an accurate prediction? Or is it C, a magic formula? Wave your magic wand, and there it is. So go ahead and select one of those in the poll, which one you think the forecast is. Don't worry, all your answers are anonymous, so we don't know who's saying what. Now, a little bit about a hopeful plan. That's actually not the right answer, so I'm glad nobody's picked that so far. But a hopeful plan is what your budget is, and we'll talk more about that in just a minute. But a forecast, yay, everybody selected answer B. A forecast is B. It's an accurate prediction of the way your business is actually going to go based on where it is now. So let's dive into that. Budget versus forecast. First of all, the purpose of a budget it has a twofold purpose, is planning and control. Planning means developing and meeting the company's goals, and control means that you can measure it, you can understand whether the budget is what you plan for or not, and if you're not on the plan, how do you adjust and get on the plan? Or if it's better than the plan, then you know you did something right, and you can analyze what you did correctly, what went good, what exceeded your revenue and exceeded your profit, so that you can continue doing that and rev that up a little more. So basically, a budget is a detailed plan for the company's future expressed as financial figures. Now, the main thing we want to emphasize today is that when we think of a budget, we think of dollars and cents. We think of numbers on a spreadsheet. And yes, it is that. But the main purpose of a budget is that it's a tool for planning for the future. It is a way of expressing your company's objectives and then meeting those objectives or knowing whether or not you met them. So it is really a valuable management tool or ownership tool that helps you plan for your company's future, whether the future is next quarter, next year, or a couple of years down the road. Today we're going to crush the budget. Woohoo! Who is ready? All right, go ahead and say, I'm ready in the chat if you are ready to up your profits. Budgets and forecasts are necessary for any business. As I just mentioned, they are important management tools. Now, the one thing we don't want to do is we don't want to get stuck. We don't want to produce a budget and then file it away, leave it on the computer, never look at it again, and think we're going to meet that. So it's really important to continue to review the budget on a regular basis and adjust it as needed. And we'll talk about those towards the end today when we talk about a rolling budget and a flexible budget. But in order for it to produce positive results, we have to rely on that as an important tool. Oh, Irene says, I'm ready. Yay! Awesome, Irene. A budget is a key component of developing an efficient operation. You have to know how and when to make changes based on performance. And if there's no measurement to the performance, you don't know how you're doing. So a budget helps you to know whether you're on track or off track. So as I just mentioned, the definition of a budget is it is a target expressed in financial terms for where the business wants to go. Now, here's the key point. It is the company's intention to hit the target. Another thing I would like to bring up about budgets is that sometimes we look at a budget as, for example, we pull out last year's sales figures and say, okay, I want to increase 10% this year. I want to increase 20% in my revenue. I want to cut expenses by a certain amount. And that's okay. But instead of looking at what you did last year, why don't you pull out your vision, pull out your mission statement, look at your vision of where you want to go, and try creating your budget based on your company's vision rather than what you did last year. And that's really what a budget should be. It should be more of a hopeful vision for the future than necessarily, it should be based on reality. We'll talk about a stretch budget too. But that's a difference with a forecast, right? So with a forecast, it's based on current business operations. So it's basically a projection based on where you're actually headed now, and also based on what you see happening in the market, the trends, your industry, your current resources, and things like that. So as an example, let's go to the next slide here, budget versus forecast. So as an example, if you said our budget is to, net $200,000 this year in profit. And then you look at your forecast, and your forecast says you're on track. If you would follow your current sales, maybe half the year is done and you have 50,000, then your forecast would probably be 100,000 and it would not meet that budget. Or perhaps your forecast, you're already at 200,000 for the year, halfway through the year, and now your forecast can be 400,000 and you've exceeded your budget, which is great. So again, the budget estimates or quantifies the expectation of revenue the business hopes to achieve in a future period, and it's a plan or a direction that you want to take the business in. Whereas a forecast estimates the amount of revenues that will actually be received, and it indicates where the business is actually headed based on what's happening right now and what you've done so far for the year. So I hope that makes sense. Just to go back. So a budget is an active document because it's an intended goal, whereas a forecast is more of a passive document because you're just basically showing the trend that's already going to happen. That's expected result based on where you are currently. Oh, now we get to talk about a stretch budget, right? You see that dollar bill stretching out. What is a stretch budget? That's an optimistic budget, and it helps push everyone in the business to reach a higher level or a higher plateau. So, for example, if the sales were X amount last year, you say, oh, we're going to do X amount this year. That's not really a stretch goal. A stretch goal is something you say, well, we're going to do X amount plus this amount. So we're not really sure if we can get that. It's realistic, but we're really going to have to push ourselves to reach that goal. And that's what a stretch budget is. Now, as an owner or manager, you might actually have two different budgets. You might have what we'll call the real budget, which is realistic. You keep that close to your vest. You keep that, to yourself or in your very close team. And then you share with your other department managers or your other managers the stretch budget because you really want them to reach for higher sales, more production, more revenue, right? And you want them to stretch a little bit. So that's what a stretch budget is. And you can actually have more than one budget prepared. Now let's talk about the budget process. I know we talked about our financials last time. Now let's talk about our budget. How often do you budget? And your choices of answers are A, monthly, B, quarterly, or C, annually. Now, if you haven't yet started budgeting, if your business is new or you just haven't done it yet, this is a great opportunity for you to decide and make a commitment on which one you'll do. Monthly might be a little too often for some people unless you have a lot of activity in your business or you're embarking on a new venture. You might want to monitor that closely. Many businesses look at quarterly, and I'm going to show you a rolling budget on a quarterly basis. So I do recommend quarterly. Maybe have the annual budget completed, but then review it quarterly and adjust as needed quarterly. All right, who's going to answer our poll? A is monthly, B is quarterly, C is annually, and if currently you aren't budgeting, go ahead and pick the one that you are going to start doing, commit to, and stick to. What are the benefits of budgeting? As I mentioned before, it's one of the best management tools available. It helps to hold everyone accountable to the same standards. It also allows owners and managers to set minimum goals for performance, minimum acceptable goals. And also, like we said, with a stretch budget, you're also setting some, hopeful goals as well. And the budgeting process could actually be for any accounting period. I know we just talked about this in our poll, but it could be monthly, quarterly, annually. You could do it semi-annually. I do recommend creating a budget for the year and then reviewing it quarterly and then doing the rolling budget. We'll talk about that at the end. So let's talk a little bit about who's involved in the budgeting process. Now, it would be prudent of you as a brokerage owner to have a team of managers or your advisory board help you with the budget. And when I say help you, it's not necessarily that they're going to be responsible for creating it, or it's not even a democracy really, but you do want their feedback and you want their input. That's really vital, because the more people are involved in the budgeting process, the more likely they are to have buy-in, as we call it, or a vested interest, and be part of the process that upholds it, carries it out, and fulfills your budget. So in other words, if you want your salespeople to be higher producing and to meet your goals for production for next year, it might be helpful to have a team meeting and talk to them about the budget and ask them, what do you think we can do to reach our highest peak goal, together as a company? Instead of, people competing with each other, you might actually see more collaboration at your brokerage. So people who participate will have a vested interest in the outcome. They'll be more likely to keep the budget. And most importantly, there'll be less resistance. We've all worked at a company where, decisions came down from the top down from the corporate office, and they said, this is what you will do. And there's always some sort of resistance to that, right? Because people don't want to be told what to do. But if they're offering their opinion, whether or not you take it, if their voice is heard, they feel they have a vested interest, and they'll be more likely to perform up to the standards that you're expecting. So the teamwork does take some time and effort when you're trying to achieve a common goal. But by involving people, getting their opinions, it's more motivation for them to cooperate and fulfill their end of it, right? Because you are relying on your salespeople to be able to pull their weight and make these production goals. So again, it's the budget is not their decision. It ultimately all comes back to your decision as the brokerage owner, or maybe yours and the manager, how you want to run your company and what your vision is. But to give people a voice and help them feel involved is a vital, important part of budgeting. For the budget goal, I recommend that you set a direction for the business that you want to accomplish. Use realistic, targeted numbers. Again, you want to keep pushing that a little bit up so that people have a little bit of push, right? That we talked about the stretch budget. But again, you don't want to make people feel like the budget is so far out of reach that they're never going to accomplish it and they don't even want to try. So make sure it's right there in their wheelhouse where they can get there. Setting targets is a really important part of your budgets. You can use your past performance to estimate your future performance. But as I said, I would also recommend going back and looking at your vision statement and seeing where you want to be, taking some time to think about the market and where you fit in the market and how your company can, excel in your marketplace. You want to look also industry standards. What are competitors doing? Look at the real estate market. Where is it heading? Okay, so again, budget realistically, yet stretch everyone a little bit and then give them some tools to be able to reach those stretch goals. Any questions? Okay, I don't see any questions. We're going to keep going now. Budget categories. All right, so we have a master budget, and this is how it all starts, with a master budget. And then under the master budget, you'll see your operating budget, your sales budget, your expense budget, cash budget, and your capital budget. And we'll take a moment and just touch on each of those now. What I have for you here is an example of a master budget. This is actually not for the real estate brokerage business. It's a different type of business, because you can see they have manufacturing, labor, finished goods, and direct materials. So a real estate brokerage budget would be a little simpler. But what I want to demonstrate here, let me turn on my little whiteboard. All righty. Let me get my red pen out. Excuse me. So what I want to demonstrate is that this is an Excel worksheet. You can see down here at the bottom, there are different tabs. Each of those tabs are reflected up here in the schedule and the title of the actual report. Well, this one, there are actually 10 schedules and 5 worksheets that go with it. You start with your balance sheet and your budget assumptions, and then you can go right on into your sales budget, your expense budget, cash budgets, and things like that. And the reason that you want to do this in one Excel workbook with a bunch of different worksheets as tabs under it is because they all tie in together. Everything that you do in one budget affects another budget. And it all comes back to the master budget. So by linking them together, you have a great tool to be able to change one thing and see how it affects everything else. Now, I know a lot of us use QuickBooks, which is a great tool. I would actually start with Excel, and then I would take the numbers. Once I got the numbers to where I wanted them to be, I put them in QuickBooks from there. So I wouldn't start with QuickBooks because it's good, but as far as budgets go, it's kind of limited, and it's not the place where you want to play around with the numbers and, try different scenarios. You want to do that in Excel, and then once you have it, where you want it to be, then you can put it into QuickBooks, and QuickBooks does allow you to run a budgeted versus actual report, which, we run every month to see how close we are to meeting our budget. Okay, hope that makes sense for everybody with the master budget. And if you have any questions, you can always send me an email or reach out. So what is the operating budget? That is the general budget for the company. That has revenue and expenses, and both types of expenses, both variable and fixed. Now, as we remember from last week, the variable expenses or costs are those that are related directly to our production. So, for example, our revenue is a transaction closed. Our variable expense or cost of sales would be that we pay the agent X% of the commission that comes in on that. And then our fixed expenses are those overhead expenses, such as everything that keeps the lights on is what I call it. Okay, so that would be our building lease or mortgage. That'd be our manager's salary, which is those are probably your 2 big expenses, or your SELFA salary, hopefully. That would also be your utilities, your equipment, your marketing that you do for the brokerage in general, all those tech tools that you pay for your agents. If you have a transaction coordinator or an administrative assistant on staff, that would be their salary as well. So those are what I call the overhead expenses or fixed expenses, that those would have to be paid anyways every single month, regardless of whether or not you're earning a dime. Okay. So the operating budget will have your revenue, it will have your expenses, and then you'll be able to see your gross margin and your net profit and the taxes at the very bottom, and the net after taxes. The next one is your sales budget. Now, why you wanted to do a sales budget separately is because on your operating budget, you're probably going to have very general categories, and you'll probably lump all your income together or your revenue. Whereas on a sales budget, you can expand a little more, and you can have specific revenue streams, and you can see what each source of revenue is doing, as we sort of looked at in the last module. And it really helps you to break that down in details. Also, with a sales budget, it helps you to look at some different what if scenarios. For example, what happens if we add a new revenue stream like property management? How would that affect our sales? What if we take away something that's underperforming? Maybe we're doing REO business and we notice it might not be profitable and we want to break it out and see whether or not. So you want to base your sales budget on sales performance, which is your own internal company's resources and what you've done in the past, competitive forces, which are things happening in the market with your competitors, and also current trends in the market, which looks at the entire economy. Those are the things to base your sales budget on and prepare for the future. So just remember, in revenue, there'll be two things on your sales budget: pricing and volume. What are you charging and how much are you going to sell? And put those two together, and that's your revenue. Now, the next budget is your expense budget, but the expense budget is based on the sales budget, which is why you have to do the sales budget first, because you don't know how much you're going to spend until you know how much you're going to make, right? Well, the fixed expenses, you sort of know that. I mean, they're fixed every month. But if you look at your cost of sales or your variable expenses, those are going to depend for the most part on your sales budget. Okay. And another thing with the expense budgets is you may have multiple expense budgets. If you have a sales budget for different, for each different revenue stream or profit center that you have at your company, you might have a related expense budget for each of those as well. Okay, I hope that makes sense. Any questions, please let us know. Just type into the chat if you have any questions as we're going along here today. Who's ready for a poll? All right, we have a little poll here for you. It's our last poll today. And the question is, which budget is most critical? Now, we just spoke about operating budgets, sales budgets, and expense budgets. So please, we need your participation in our poll. Let us know which one you think is most important: A, the operating budget, B, the sales budget, or C, the expense budget. Now, we sort of already gave you some hints, right? We said the operating budget has everything in it because it has your revenue and expenses, whereas sales budget is, you're breaking down just sales. The expense budget, you're breaking down just expenses, right? Okay, so the answer is A, the operating budget is the most critical out of these three, because the operating budget is going to be the start for your sales budget, which is then, the kickoff for your expense budget. Okay, we have an answer coming in: sales budget. Okay, awesome. All right, great job, everybody. Let's keep moving. Now we have our capital budget. This is often sometimes referred to as the capital expenditures budget. And it's basically for things that you want to spend money on. Okay, so capital is your cash and expenditures is how are you going to spend it. So things like fixtures and equipment. A capital budget is just as important as a departmental operating budgets because it looks at what assets are going to be purchased and what long-term effect that would have on the company's profit. Now, for a real estate brokerage, you're not going to be manufacturing widgets, so you don't need to purchase any, those types of inventory. But you might have an opportunity to purchase the real estate office that you're at, or to purchase other assets. And if so, that would be something that you would want to weigh and see how that would affect your company's short-term profitability as well as long-term, and how that would affect your balance sheet as well. Remember, I said all these budgets go back and they affect the balance sheet and on the master budget. All right, the last budget we're going to look at is the cash budget, which is also referred to as the cash flow budget. And that one, if you ever are in QuickBooks and you pull the cash statement, that really shows you the cash coming in and going out. So, right, we call that the where got, where gone. In other words, where'd the money come from and where'd it go? So you want to see cash inflows, cash outflows during a budget period, and you want to know how the cash resources will be acquired and spent, and the cash flow budget will show you that. Now, this is a little bit of a complex example on the cash budget, so I really don't want to talk about in detail. The main thing I want to bring out is that cash does not equal profit. Okay? Sometimes we look at money coming into the bank account. We think, woohoo, there's a ton of money coming in. I must be really profitable. And then we run that profit and loss or that income statement. We found out on the bottom line, we're barely breaking even, right? So cash does not necessarily equal profit, whether it's a little or a lot. They're two totally separate concepts, but a cash budget is important to have because it tells you things that the income statement will not. All right, now we're moving on to the different types of budgets. Who's still with me here? Let me know. Let me know if you're ready to hear about the types of budgets, and we're going to learn about static versus rolling and fixed versus flexible. What is a static budget? That's also known as a fixed budget, or it is fixed, I guess you could say, because it always stays the same. So a static budget remains the same until the next budget is prepared. As an example, you would prepare your budget for, say, fiscal year 2019, which say we're also following the calendar year, so it'll be January 1st to December 31st of 2019. And then at the end of the year, you prepare a new budget for 2020. That would be an example of a static budget that doesn't change. Next, we have the rolling budget. We said a budget is sort of like the wheels on a car, right, that keep you turning and head you in the right direction. And a rolling budget is definitely that. A rolling budget is also known as a continuous budget or a perpetual budget. And what it does, it takes the annual budget, it splits it into 4 quarters, and it includes whatever the most current upcoming 4 quarters are. Now, I should go back to there and say, it doesn't have to be quarters. You can do this monthly, you can do annually, or whatever it is. Most businesses are going to use quarters, and I'll show you why in just a minute, but it could actually be any type of basis. The key is that as soon as one accounting period, such as a quarter, ends, the budget rolls into the next quarter. So let's take a look at an example of that. All right, so here we have an example of a rolling budget. Let me turn on my little whiteboard so I can highlight this for you. Up at the very top, we see 2019. Let's see, what color am I going to use? I'll use my purple marker, my purple pen. So here we have, right, 2019. We have quarter 1, quarter 2, quarter 3, and quarter 4. Yay, we're doing good. We got our budget done. It has all 4 quarters. The year is complete. Whew, that was a lot of hard work. Now we can lean back and rest. Well, not so fast. Because as soon as this quarter is over, quarter 1, now we're in quarter 2, so why do we really need quarter 1 anymore? We really don't need it. So to have a complete 12 months, what we're going to do is we're going to go keep 3 and 4, but now we're going to go into 2020, and add on quarter one. So that way we still have 4 quarters. We still have a complete 12 months, but it doesn't include irrelevant data from the past. It only includes the 4 most current, most upcoming quarters. The same thing happens again the next quarter. Quarter 2 is over. Whoops. I accidentally crossed off quarter 3. Okay, hold on. I got to find my little eraser here. Here we go. There we go. Okay, so now quarter 2 is over. So now we're going to cross off quarter 2. And we're going to add on. So now we're going to start at quarter 3, quarter 4, and then we roll into 2020 again. This comes down, quarter 1, and then quarter 2. So now we still have 4 quarters again, right? I hope this makes sense. And again, we do it the next time. Quarter 3 is over, so now we're going to drop down. We're going to start with quarter 4 of 2019, and then we're just going to add on the first 3 quarters of 2020. Okay, so we're continually rolling the budget forward. As soon as one accounting period is done, we pick up the next one that's in our sights. The bottom line is the result will be a more up-to-date budget because we're not dealing with irrelevant information after it's happened that we really don't need anymore. We can't use that data for our upcoming budget, and we are looking to the future. So you can see we're looking at quarter 1 of 2020, quarter 2, quarter 3. So we're always looking forward towards the future. Now, you're probably asking yourself, isn't that a lot of work, constantly updating the new quarters? It is more work in the short run, but in the long run, it's actually easier. It's easier than sitting down once a year and deciding on the whole budget for the year. And then by the time next year is come and gone, you've forgotten the little things that happened during the year that you need to incorporate. And a lot of that day-to-day operation is lost because it's so long ago. So the advantage of a rolling budget is it forces the management to constantly review the performance, review production, and update those goals. It keeps the management abreast of the current factors that influence future business decisions because you're always looking at the economy and economic conditions. You're always searching and scanning the competition. In 1 year, a lot can happen in our real estate industry. A lot can happen in our local economy or your local market. So this allows you to stay updated with that. Are there changes in products that you're offering or service lines? It allows you to incorporate that without having to wait a whole 12 months to get that feedback and see how they're doing. The bottom line is the constant review of goals keeps the owners and managers involved in the daily decision-making processes, which is so important. Okay, so a fixed budget. Now we're going to talk about fixed versus flexible budget. Okay, so a fixed budget, as we said earlier, the numbers in a category remain the same throughout the entire budgeted period. There are no changes made to it. Whereas on the other hand, a flexible budget, also known as a variable budget, allows you to adjust based on things that are happening as they actually happen, or we call it actual performance. The great thing about a flexible budget, it allows you to offer a worst case and best case scenario. So in other words, you have, here's what we think the budget's going to be, but let's think of the worst that could happen. Okay, let's put that on one side. Let's think of the best that could happen and put that on the other side, right? Of course, we always want to target the best case scenario, but we know things happen that we can't always control, or maybe we're not on the ball doing our job, and sometimes we fall below our budgeted expectations. So I'm going to turn on the whiteboard. Oh, it looks like it's still on. And here's one more little illustration for you of a budget. This is a flexible budget. Now you can see this is actually just for a month. Again, it doesn't have to be for a whole year, but you could actually budget for any accounting period, as I said before. And here's our sales, right? We're looking at our sales of $125,000 for the month, but we've added a worst case scenario of $100,000, and we've added a best case scenario of $150,000. Now, if you'll notice, I'm going to clear those off, but if you'll notice, the fixed costs stay pretty much the same, right? Because your overhead doesn't change. However, what you can see change was the variable costs, and they rise, they increase with the sales because they're linked to the sales, right? So therefore, you can see your income has increased, right, based on your, let's clear it off, based on your, projected budget, or your budget that you're hoping to achieve, and then you have your worst case scenario and your best case scenario. I hope that makes sense with everybody. Please let me know if you have any questions, comments, or anything. All right, the last part of budgeting is to prepare what's called a budget variance report, also known as a performance report. And you see our little tool there with the wheel, because we're sort of giving a tune-up with our budget variance report. We want to analyze it to determine why variances occurred. Now, variance is something that you did not plan for or you did not expect, right? It wasn't in your budget. So why did it happen? Why did we go so far off the mark in this area or that area? Now, remember, the variance could be good or it could be bad. For example, if we had less sales than we anticipated, that would be a bad variance, also known as unfavorable. Whereas if we had more sales than we had budgeted, woohoo, yeah, we're all jumping for joy, we're celebrating, that's a favorable variance. And so we want to compare that. Okay, so this is my last little worksheet here. And turn on my whiteboard. So this one, you can see here was our actual performance, 690,000 in sales, and we have budgeted for 60,000, right? So we subtract that, the variance was 90,000. Was it plus or minus? Well, in sales, it was plus. Yay, we did great. So we get an F, which does not stand for flunking. It stands for favorable in the accounting world. So F is a great thing in accounting. And then we look at our costs. Overall here, our total variable costs, budgeted at 270. We spent 296, which was 26,000 more than we budgeted. So that was actually unfavorable. But then again, if we compare to, we earned an extra 90,000 in revenue, it's not too bad, right? Our total fixed costs, we budget 147,000. We actually came in under budget at 145. So it was $1,160 under. So that was actually favorable. And overall, we expected to make $180,000 income. We actually made $247,000, which was $64,000 more than we budgeted. So that was a favorable result. Woohoo! That's pretty awesome. Now, I know you can go into QuickBooks, you can print out your budget and your actual. It's not going to give you all of this data, so you probably will have to prepare this yourself in a spreadsheet, or you can just, hire somebody like MVA Broker Consultants. We can help you do all this as well. The bottom line is that plans are nothing, but planning is everything. I think it was General Dwight Eisenhower who said something to this effect, that the plans themselves are worthless, but the planning process is so critical. We know we're not going to hit our goal. We know reality is Nothing is going to happen exactly as we hoped or planned, but that's part of the process. That's part of life. And it's just like going to a sports game. It doesn't matter what the odds are or who you think is going to win or, what the projections are. You have to wait till the game plays out, and it will never happen exactly as somebody thinks. And that's exactly what your business is. It's not going to happen. It's not going to unfold exactly as we planned, but we have to have the plan, the game plan going in. And that's what your budget is all about, having the game plan going in. Okay, we do offer consultations, as I mentioned. We can help you crunch all this data, put it together, make sense of it, and help you figure out if you're on the right track. We can make recommendations for you, put together a plan of action to help ensure that your company has maximized your profit potential and is continuing on that path in the future, right? It's all about putting those wheels on the path and steering in the right direction. All right, we have an action plan for you to take back to your office. First, another quote. I think we all know this one, right? If you fail to prepare, you prepare to fail. Wah, wah. And that's what we don't want to do. And that's why the planning process is so important, to prepare in advance. We don't want to be, as they call, a flash in the pan, here today, gone tomorrow. We want to have a brokerage that's built on a solid foundation with a diverse income stream that lasts for, many years in the future, and something that you can, when you're ready to retire, you can sell it, you can will it, right? And what you don't want to do is just close it down and have nothing to show for all your years of hard work. So the action plan is, pull out your vision statement for your company. Go back to square one. Review your vision. Prepare your budgets that meet that vision. They should be in alignment with that vision, building on the values of your company. How do you meet that vision? If your vision is to be the number one brokerage in sales in your zip code, how do you prepare a budget that meets that? And remember, your budget might not always come to fruition exactly as you think, and you might not always meet that, but you need to have somewhere to start as your guide. And that's what a budget is. A budget is simply a guide. It's a tool for you to use to help you meet your company's objectives. And lastly, remember to seek assistance from experts. It takes teamwork to make the dream work. And we all need a great team of experts on our side. CPA, bookkeeper, consultant, tax preparer, all these are people that you need on your side. Now, I hope everybody has enjoyed the activity worksheet that has been shared with you today. I'm going to go ahead and stop the file sharing there. Please take a look at it. It has an outline. It has an analysis, a self-analysis you can do, or you can hire our company to come in and we'll take care of that for you. And lastly are the two books that we have for you today. That's a company analysis, Accelerate and Push the Needle. Woohoo! So today's recap, we went over the budget versus forecast, the budgeting process, budget categories, types of budgets, and we learned that budgeting is the wheels that make your car go, or should we say your business, your company, that steer the direction and help you get going. If you have any questions, please let us know. We're always here for you to answer any questions. All right, here are the two books that we have for you today. Successful Budgeting and Forecasting, Learn in a Week. What a great idea. It breaks it all down nice and easy so you can understand and get a good overview of budgeting and forecasting. And the second book is Brilliant Budgets and Forecasts, your practical guide to preparing and presenting financial statements. That book is a little more advanced, but again, start with the successful budgeting forecasting in a week book. And then once you have the basics down, then you can go on to the other book, Brilliant Budgets and Forecasts, and especially prepared for small businesses. Okay, who's still excited about their business being profitable? Say woohoo! We have something great for you today, which is our masterclass offer. Okay, so you now have an offer up on your screen. There's a blue button that says Discover. Go ahead and click on that if you would like to learn how to build your brokerage empire with 12 courses. We have online access available 24/7, 365, worksheets to complete activities and keep you on the right track, bonus content, resources for you to continue listening and learning and working on your business, right? Not just in your business. And if you already have the masterclass, take some time, put aside about 2 hours a week to work on your business. Now, that's not a lot of time. Look at your schedule and where you have some time that is not being used efficiently. I like Sunday evenings, actually. I like to start to plan for my week and work on my week. It's generally a quiet time with no phone calls, no emails. So look at your calendar and pencil in 2 hours per week to start. That's a good commitment to start with. Now, our next module is going to be all about internal controls. It's about risk management, fraud detection, fraud prevention, and keeping your business safe. And you might be asking, Regina, why are you talking about that? We're supposed to be talking about profits. Because what good does it do to have, a sink full of profits if they're going down the drain just as fast as they're coming in? If there's a leak in your operations, right? If you're driving a car and there's a leak in the gas tank, then you're not going to get very far because all the gas that you put in is going to keep leaking out. So we'll be dealing with that in our next module, internal controls. Are you ready? It's time to rev up your engine. Vroom, vroom. Thank you, everybody, for joining me today, for taking time to drive profits to the max, accelerate your real estate brokerage, and push that needle. How important is that for us real estate brokerage owners to continue working on our business and staying focused on the bottom line? I know we wear a lot of hats. It's really easy to get caught up in, transactions and agents and, crisis and buyers and sellers. But I encourage you to just take time every week to take off that working in the business hat and put on your working on the business hat. Hope everybody had a great session today. We'll see you soon. Thank you, everybody. We are done for today. Bye-bye.